Good morning. This is Japanese Economic Review Channel. Yesterday, March 27th, the Tokyo market faced extreme intraday volatility. The Nikkei 225 plummeted over 1,000 yen during the morning, but staged a significant recovery to close at 53,373, down 230 points. Meanwhile, the Topix showed resilience, finishing up 6 points. This session highlighted a market deeply reactive to both geopolitical shocks and rapid reversals triggered by executive headlines. The primary driver for yesterday's initial sell-off was a sharp shift to risk-off sentiment globally. As hopes for a Middle East ceasefire faded, investors abandoned rate-sensitive assets in favor of safety. This led to a distinct capital flight toward commodities and defensive plays. The day's trading proved how quickly global uncertainty can inject volatility into domestic equity markets. Sentiment soured yesterday morning following reports that Iran rejected the 15 ceasefire conditions proposed by the U.S. Iran's counter-demand for reparations created a diplomatic gridlock that shattered hopes for an early resolution. This stalemate instantly injected uncertainty into global equities, setting a bearish tone that lasted until the midday news break. Tokyo's early weakness was inherited from a tech-led sell-off on Wall Street the previous night. The Nasdaq dropped over 500 points as semiconductor giants like Applied Materials and Meta were heavily punished. This exposure revealed the deep vulnerability of high-valuation growth stocks when geopolitical risks escalate, directly influencing the heavy selling seen in Tokyo's opening hour. Yesterday's session hit a bottom at 9:50 a.m., with the Nikkei down 1,086 yen. However, a midday SNS post from the U.S. president, vowing to pause military strikes until April 6th, triggered a massive rebound. This recovery proved that markets are algorithmically tuned to executive communication. While the index retreated slightly before the close due to weekend adjustments, the SNS floor remained a key feature. Despite the Nikkei's headline decline, yesterday's market breadth was surprisingly positive. In the prime market, 1,063 stocks advanced compared to 463 decliners. The total trading value reached nearly 8 trillion yen, supporting the TOPIX's 6-point gain. This suggests that while large-cap tech faced pressure, the broader market remained structurally healthy. Yesterday saw a decisive rotation into physical commodities. Mining and oil sectors, including INPEX and ENEOS, surged alongside marine transport. Conversely, tech and real estate stocks like Tokyo Electron and Mitsui Fudosan faced selling pressure. Defensive infrastructure, specifically TEPCO and Chubu Electric, also emerged as safe havens, reflecting a classic inflation and war hedge. In a notable divergence, the growth market 250 index rose yesterday, led by firms like PowerX and Timee. Most impressively, the IPO of Seiwa Holdings hit its stop high after a slight initial dip. This indicates that investors yesterday were still eager to support unique growth stories that appeared insulated from the broader geopolitical noise affecting the prime market. Beyond the indices, several companies announced long-term initiatives yesterday. House Foods Group launched a new venture for toddler meals, and Eisai released an app to support adult-child communication on health risks. From Zozo's education project to Asbill's career guidance, these moves remind us that leading firms are looking past short-term volatility to solve future societal challenges. Yesterday's wild swings proved that technical fundamentals are currently secondary to geopolitical developments. While the U.S. president's intervention provided a temporary price floor, the late-day retreat reflected a reluctance to carry risk into the weekend. As we move forward, market sentiment remains strictly defensive, as the gap between diplomatic demands and reality remains wide. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.